I'm really happy to welcome you to our Start Alliance session today. We will tackle today the questions of how to attract Chinese venture capital. And before I hand over to our speakers, please let me shortly introduce myself. I'm Sandra, and I work as an area manager for the Chinese market at Berlin Partner. Berlin Partner is the business development agency of Berlin. And actually, before Corona, I traveled with startups from Berlin every year to China, and we discovered different cities, for example, Beijing, Shanghai, Shenzhen. And I'm really looking forward to the next trip to China with companies from Berlin that we will do later this year. And actually, in China, we also have two cities, Beijing and Shanghai, that are part of our Start Alliance network. What is Start Alliance? Start Alliance is a network of 9 partner cities, which includes Tel Aviv, Paris, London, Shanghai, Beijing, Vienna, Dubai, New York City, and of course, Berlin. And we founded the Start Alliance network in 2015 to support startups in setting foot in international markets and opening doors in the ecosystems that I've just mentioned. And we regularly host events. You can check out our websites for the next events. And we will post the link here in the chat of the Start Alliance network. And what are the how-to sessions? In the how-to sessions, we will always mention different or talk about different topics that are relevant for startups within the network. They are taking place roughly every 2 weeks and are organized with these partner cities that I've just mentioned before. And so they're always taking place in English. It's a short format to provide you with tips and tricks regarding those markets, which you can use right away. So as you all know, today's topic is how to attract investors from China. An increasingly number of Chinese big techs and early stage investors are expanding their investment portfolio on global markets. And in this session, our speakers will look back on key activities and trends in the Chinese venture capital industry over the past years, as well as providing insights on what differences to consider when international startups seek cooperation with investors from China. And I'm really happy that I have 2 experts here with us today. First, I would like to introduce Eamon Wang to you. Eamon is the managing partner at KR Europe. That's the European sister of China's largest tech media company, 36kr.com, also known as China's TechCrunch. Eamon has previously served at various European venture capital funds, business incubators, and startup accelerators. And he's keen on supporting tech companies between China and Europe expanding into global new markets. And Eamon received his master in finance from University of Cologne. Thank you very much for being here with us today, Eamon. And our second speaker, I'm really happy to welcome Will Wang with us here today. Will is a partner at BAI Capital. That's a leading venture capital fund in China with a strong background from the Bertelsmann Group. And he's really a veteran in the Chinese VC industry. He has led investments into more than 50 high-growth startups, including Dingdong, Maicai, Mobike, Keep, Outer, and Source Technology. And Will received his master in management from London Business School. Well, thanks a lot for being here today with us today. I'm really curious about what you share with us later. But now I will hand over to Eamon, who will give us an overview about the development of Chinese VC. Thank you, Eamon.
Thank you, Sandra, for the introduction. My name is Eamon Wang. I'm the managing partner of KR Europe. And as Sandra has just mentioned, 36kr is so-called 36Ke is a aware technology platform, one of the biggest in China, and serving in different regions, different languages. This is our Chinese website. So it's kind of a most validated website for entrepreneurs, startup founders, technology investors, and angel investors. So we have at the moment something like 900 million monthly page views. We serve also English content to our English audience, especially in Europe. We have English version for the European edition called the KR Europe. We have a Southeast Asia team based in Singapore, serving to the local readers also in English language. And we have a Japanese website in cooperation with Nikkei, the largest financial newspaper in the world, also mother company of Financial Times. We serve local contents in Japanese language to our Japanese readers. The latest family to the 36Kr media brands is essentially Chuhai, also called 36Kr Going Aboard. This is a platform that we have created since the beginning of the pandemic, as we see increasing number of Chinese technology companies and also venture capital investors, angel investors are going beyond the border of China, entering into international market. And this is also an area where we would have a lot of cooperation and collaboration with the Startup Alliance network. Here, thanks again for the network for facilitating these exchanges between different ecosystems. Beyond the media business, we also do a lot of consulting services. I'm not going into details into each one of these. So basically, we do publicities, we do consulting, innovation scouting, due diligence, data research, analytics. So if you are interested in any of this, please feel free to reach out to me after this event. So we had a lot of discussion before the event because we have no idea how your knowledge will be. So maybe some of you have already worked with China, some of you are pretty new to this topic. So we decided to give you a kind of a brief introduction of the venture capital market in China in a nutshell, to understand what happened in the past 20 years, because this is very important also for the market structure for today and also the decisions that the VC investors make today. And we're going to give you a short recap of the 2022, what happened in the China's VC sector last year, who are the winners, who are the losers, which sectors are to watch. And we are more than glad to also continue this discussion together with you to see what are the current outlook, current opportunities, and what are the teams that we want to give for international startups who want to collaborate with Chinese VC investors. So that's basically a short introduction. Allow me to take everybody back to the history. So I think similar like other industries in China, the VC sector in China started as a national-owned venture. So the first VC fund in China can trace back to the 80s, in the year of 1985, so called the CIVIC. It was like a small fund in today's volume, it's only $10 million. To cut the long story short, the CIVIC experiment was a failure. We learned a lot of things. I think most important is that the venture capital is not a sector where you can drive by the national control. You cannot run a national VC fund in this structure. CIVIC was kind of liquidated during the financial crisis in Asia in the 98 to 1999. So at the time of the liquidation, we find there's basically the portfolio is more or less empty. So there's nothing left in the fund. The first modern or first successful venture capital fund in China is the IDG Capital, so founded by an American businessman called Patrick McGowan. He's basically a tech entrepreneur, he's American, and he was like behind many magazines from that time. Maybe you heard some of them, like PC World, Computer World, and some are also in German, I think, Computer Worker. So you can imagine this is kind of a tech pioneer, and he basically putting his own $10 million into this fund, together with his Chinese colleague Xiong Xiaoge, Hugo. So these two gentlemen were like the godfathers of China's VC sector. So both gentlemen, they created a joint venture with the Shanghai local government, because in the 90s, you can't do anything in China without a joint venture partner, which is not required anymore today. IDG Capital basically invested over 7 years in China's internet sector, and they waited really for a long period until they backed their first IPO, which is the Sohu.com, at that time as known as China's Yahoo in the year of 2000. If you are very familiar with the history of Silicon Valley, you will see 2000 is the year where you have this big .com bubble and the crash of the stock market later that year. But however, IDG continued their exit, and they have delivered some more unicorns onto the stock market, like Ctrip, China's Expedia, Tencent, at that time as known as China's AOL. And also most importantly, 2005, the big IPO for Baidu, China's Google. Why this Baidu IPO is important? Because it is a very landmark deal which returns investors like 100 times multiples. And in the year of 2005, we really start to see the international VC players pouring into the Chinese market. And not only these big names like Sequoia, GGV, we have also a number of Chinese entrepreneurs who come back from Silicon Valley, bring their know-how, and also most importantly, bring back their LPs, then bring back investors into the Chinese VC market. That is become later on as known as the big names today, like Hill House, Northern Light, etc., etc. Similarity of all these early stage venture capital funds in China was that they are all using this so-called VIE structure, as you can see on this slide. So VIE does not stand for Virgin Islands, it stands for variable interest entities. So it's basically a setup of multiple legal entities and like 20, 30 contracts to create a structure where to enable foreign investors to invest in US dollar into a operating business in China. And later on to exit that operating business while a Cayman Island holding as a listing company to sell shares on the Nasdaq stock exchange so that the US investors, they can get their returns back from the retail investors. So no wonder these first generations of the LPs in China are also US dollar funds, your usual suspects, university endowment, fund of funds, family offices, pension funds, all these long-term LPs were all involved in this VC boom in China in the early stage. And this VIE structure is still used till today. Using this structure, so investing using US dollar into China, make a startup grow, and then list it on a big ticket IPO on Nasdaq, we have seen this boom over the 20 years. I think many of these names you have heard of, starting from the early 2000s, the boom of PC internet, the big portals, e-commerce, to the middle of the 2010s, we see the rise of mobile. And most recently, starting from 2018, we see new mobility startups coming from China, and not making apps, not making gadgets, but starting to make premium electronic cars, like NIO, Li Auto, Xpeng, etc., etc. The situation shifted in the year of 2021. So one important IPO was the Didi IPO. Why this is important? For one, it is huge. It's raised something like $4.5 billion in one transaction. And Didi is known as the Uber of China. It's the biggest car sharing network in China. And another reason why this deal is important is that Didi was so much pushed by its venture capital investors because, as you can see, over the 20 years past, the valuation of the Chinese startups has reached such a high level that you cannot really get a very easy exit without satisfying all your investors. So Didi was pretty much under huge pressure from its VC investors to put this IPO onto the market, but it still has some problems with the Chinese regulators in terms of the data compliance, data protection. Not a huge deal, but Didi still decided to push this IPO through. As a consequence, after the IPO, the platform has been more or less shut down in a way, and led to a lengthy antitrust investigation by the which led to a very bearish market, I think, since 2021 to today, on all the technology stock IPOs, and then Chinese tech startups IPOs. It's basically freezed since then. And many projects are starting to use this similar VIE structure to the Hong Kong market because you can still use the same structure to IPO in Hong Kong. And we see also many of these companies, startups who are planning a domestic IPO in China. As we mentioned in the very beginning, the first VC experiment in China was a failure. However, the local market did not stop from evolving. So over the last 20 years, we have a really long story in the equity market in China, but let's skip it forward. Today, we have a more or less established capital market in China. There's different exit channels for technology companies, startup companies to put on a listing without making huge revenue already. In Shenzhen, in Shanghai, in Beijing, there's different exchanges for that. And most importantly, we see the growth of the domestic Chinese venture capitalists is really really been booming since the late 2010s. I think 2016 has been a landmark year. First, in this year, China has announced its, the central government announced its policy on the so-called mass entrepreneurship and mass innovation, the so-called Shuangchuang policy. And also in this year, we see several mothership fund of funds has been created by the central government, pooling liquidity into the market. So these fund of funds are typically very huge, and their role is to act as LPs, as renminbi LPs, to invest into renminbi venture capital funds and private equity funds. So with the boost of liquidity, we really see a boom of the domestic renminbi venture capital funds. In terms of number, I think nowadays the renminbi funds is really far more than the numbers of the US dollar funds in China right now. We want to put everything more simple, so we made this one slide to give you a roughly overview of the most important players, especially for international startups. So if we look at the so-called VC categories in China, first we see this VC 1.0 players, these big names, IDG, Sequoia, Hillhouse that we mentioned in the very beginning. So these are become after 20 years and made IPOs after IPOs. So they have typically a big team. They have typically multiple funds under their management, both in US dollar and in renminbi. So they can invest both ways. And they basically can cover a wide range of bases in one single project. Like for example, Sequoia, they have a huge seed fund. I think it's something like $500 million in size, investing only in the seed stage. And they do the venture rounds, but they can also do later stage rounds like pre-IPOs. They can do basically behave like a multi-asset managers, not a purely VC player. So this is the trend we observed from this VC 1.0 players. Chinese fund has mentioned we have different levels of renminbi funds emerging, especially in the last 10 or 5 years. So we're national players, then from the sovereign side, we have local governments who are also setting up their own funds. But mostly we see a lot of private venture capital funds in China. They are purely Chinese funds, and they get their LPs. Their LPs are typically renminbi LPs from different levels of the government money. So this is a very, very unique trend that I've been seeing in the market recently, because we see the domestic Chinese renminbi funds, they are very much focused on investing on specific topics like deep tech, like manufacturing, like chips, biotech. And so they are really good at these hardware and hard tech topics. In the middle, we have this so-called CVC category, so-called corporate venture capital funds. I put BAI capital here, so I think we might be disagreeing on this categorification, but please tell us more later on. For simplicity's sake, I put BAI here. Typically, these funds are backed by one single LP or by one single corporate. Like from the name, you can tell, like Lilly Asia Ventures, Biotech, Meditech, Intel, and Lenovo, chips, manufacturing, robotics. I want to point out the 2 categories of these so-called CVC players. So one category is this from the industries like Huawei, CATL, BYD, Xiaomi. These corporations, they have set up their VC units and investing heavily in categories like advanced manufacturing, chips. This is a very strong trend that I've been seeing in the market recently, because these players, you can imagine, with the industrial resources of Huawei, of BYD, of Xiaomi, it can really boost the startups that they have invested into. Another category very similar is the big techs. And so we have mentioned like Baidu, Alibaba, Tencent, this Chinese tech company who did their own IPO just like 20 years, 15 years ago. They have now so much cash on their balance sheet. So they are starting also to creating their own venture capital funds or their investment units. And so these big tech services are also becoming a very important force, and especially investing in the software fields. We have on the right side these so-called VC 2.0 players. So these are typically a group of smaller funds, but also very experienced because they are founded by previous GPT members from this VC 1.0 big funds. And the difference is this VC 2.0 funds are more specifically focused on specific investment tracks, and they are typically smaller in terms of volume and more flexible in their investment philosophy. So this is also very important force of the new VCs in China we need to take into consideration. The last but not least is the angel and seed investors in China, lead basically by Sinovation and Zhenfang, plus there's a large number of early stage investors and also doing project incubation, acceleration from the very early stage. And as mentioned, like big funds like Sequoia, like Hillhouse, they have set up their own early stage funds also in the past. We have a look at a market of the past 2022. So I think as you can see from this chart, the last year was not a great year. So we have different factors contributing to this factor. One is we have a lot of aftershocks coming from the year previously, 2021. We have mentioned antitrust investigation, the DDIPO, the crackdown on the education technology sector. So coming into 2022, we have new shocks like the Russia-Ukraine war, the Federal Reserve's rate hikes, which led to a very difficult situation for all the LPs to put in more money into new funds. So as a consequence, we see in China, the VCs are turning to a very cautious mode, I will put it this way. So last year, we see something around 5,000 investments over the whole market. That's only down by 10%. But speaking of the transaction volume, we see almost half the level of the previous year. So we had only like 76 billion investments in China in the VC categories. We have some big tickets, like the ROX is a electronic SUV maker who raised 3 rounds in 1 year, totally 400 million. That's the biggest tickets in the early stage. We have another robotic company, Mega Robo from Beijing, who raised 300 million in 1 single round. So this company is doing collaboration robots for medtech and the biotech sector. Consumption is significantly down. We had only one big consumption early stage deal, that is Harmony, a cosmetic retail chain backed by Alibaba. We saw 2 rounds totaling $200 million. The average ticket size has been also dropping to a historically low level. So last year, the average size was like 10.5 million. So which is also concentrating a lot in the smaller tickets, especially Series A funding. So we did not see so many big ticket transactions last year, which means all the investors are becoming very careful and pushing down the valuation of the projects. Who were the winners? So we see Industry 4.0 topics, everything related to high-end equipment, manufacturing, industrial robotics, smart logistics, and both on hardware and software are getting a lot of VC funding last year in China. So this is also a topic which is strongly favored by the Chinese renminbi LPs. New mobility. So this is a trend has been continuing since years, but clearly now electricity, so electrical cars, new brands, or smaller sub-brands from OEMs are getting a lot of funding, but also startups working in the whole value chain, like doing battery technologies, energy storage, charging, grid management, grid integration, both software and hardware. We see a lot of startups attracting the good funding and good valuation, especially from CVCs, from strategic investors last year. Synthetic biology, this is maybe a smaller sector in terms of the funding volume, but strategically important because of one, China has this dual carbon policy, the so-called 双碳 policy, to encourage the environmental friendly development. And secondly, we had in 2022 this global energy and resource crisis, which fueled also the growth of this sector. Basically, you have advanced technology to manufacture new materials or new products based on biological processes. we see a lot of big name VCs are putting their early stage bets into this category. On the software side, we see the SaaS winners last year was perhaps everyone providing services to the cross-border e-commerce sector. So providing all the infrastructures for the especially Chinese sellers to sell their products overseas. So online shops, social media, marketing, payments, fulfillment, and down to logistics. We have also seen some last mile delivery for the Chinese sellers who can deliver their products to their end buyer in Europe, in America. So we have seen a lot of service providers, they have gained very good valuation and very good investment from VCs last year. Losers, I think very clear, consumption and retail because of the COVID situation. We see a significant drop in the funding volume last year in this sector. But still, we think this might be some opportunities maybe for this year. And also because the human nature is not really ready for consumption downgrade. And so you are always upgrading your consumption. So this sector might see some recovery this year. Another loser was the education sector. So after the crackdown on the online education companies by the authority in 2021, we see the teachers' resources are flowing back to the school system. And yeah, it's unfortunate for the VCs who put their big bets into this sector. So what will be the hot tracks? We can only make some guesses from our side. So we'll make some guesses, but I'm more than thrilled to hear what veterans and frontline investors like you will tell us. So our guess, first, Web3. This is definitely a track we see a lot of Chinese venture capitalists are investing outside of China because of the more or less crypto ban in China. And so there's very little opportunity that you can do within China. So this is definitely one hot track for international startups. AIGC, I think this is the hype everywhere, also in China. But China has its also specific problems developing this sector, like language, like you don't have enough GPUs in China to run these foundational models. So there's definitely, we see a lot of investors, now they're looking into investment into international startup projects in this field. Two niche sector I want to mention in the very end. One is the global Chinese community sector. We see two big fundraising rounds last year, one in America, one in Europe, both targeting this grocery delivery of Asian food, snack, and fresh products. So this is basically a phenomenon that we have been seeing, that so-called copy from China. So basically, grocery delivery in China is nothing new. People have been doing this for like 10 years already. But with the know-how that people gathered within the Chinese market, many players think they can achieve a higher level of efficiency in the overseas market and targeting specific consumer groups. So this might be a track that we want to watch for this year. And gaming. So last year we see NetEase and Tencent, they are investing with their CVC arms into a lot of overseas game studios, developers, publishers, and also allowed into metaverse games. So we think this will be also a trend that should be continued throughout this year. So yeah, that's basically our guesses on the future. So I think it's a good time to switch the microphone back to Sandra to view. So let's hear what the frontline investors are thinking.
Thank you so much, Imon, for your great presentation. And actually, people got really excited also in the chat about the slides. And my colleague Chris already told them that they can have a look at because the session is recorded, they can have a look at the slides later when they have a look at the recording. But you got a lot of compliments already. So thank you so much. It was really impressive what you great overview you gave to us in this short time. And yeah, you stopped with the hot tracks and your guesses for the next year, Web 3.0, ChatGPT. And now I'm really, really curious what Will has to say to this. Will, could you please give us an overview what you see as the hottest development of Chinese VC? And it would be great if you could also tell us a bit about your view on the general development and also about the industries that would be in focus in your view.
Yeah, thank you, Sandra, and thank you, Eamon, for the sharing. And also a little bit introduction of who we are. We are called BAI Capital. So the BAI stands for the word Bertelsmann Asia Investments. So like 14 years ago, we started in China as a pure corporate venture arm of Bertelsmann, as kind of like the German family household name, I would suppose. So the business of Bertelsmann is actually 200 years old family business, 20 billion revenue each year from TV station business like RTL, and also magazine business like Gunayar. We have a publishing house like Penguin Random House, and also music business like BMG. So before 2008, Bertelsmann runs as a majority business owner of kind of like called Bertelsmann Book Club in China. So it was also a household name at that time, because before the e-commerce era, the book club was actually the kind of like the only cultural and also access to a selection of recommended books in China that could deliver to your house as a catalog business that time. So it's quite innovative, and also a very good memory of people of my age, like the people who were born in 1980s. So when I was born, Volkswagen was the household name that I heard from German, because all the cars and taxis in Shanghai was actually all Volkswagen. And so this is actually very interesting. And we closed the book club business in 2008 because at that time was really replaced and attacked by the e-commerce innovation. And so we were thinking about how we can do business in Asia. And from the headquarters, we kind of like formed a strategy together with McKinsey to start a minority investment arm in China, similar to what we have done in US. So in US, we have the Bertelsmann also have the fund called BDMI, Bertelsmann Digital Media Investments. And with the kind of like successful practice of BAI, we now have BII in India and also BBI in Brazil. And also we are setting up some fund investment practice from Central Investment in Southeast Asia recently. So in the last 14 or 15 years in China, we have accumulatively deployed over $1 billion for Bertelsmann. And also in the future, we're gonna also deploy $1 more billion for Bertelsmann in Asian market. Why we now call ourselves in BI Capital is because in 2021, we kind of like a little bit spin off this corporate venture business from Bertelsmann, and also introduce some external LP to the group. So now Bertelsmann contribute to 50% of our LP, and also the other 50 was filled by GIC, Allianz, Alibaba, Tencent, Baidu, and also families in Africa like Oppenheimer, and also some US-based funds like Goldman Sachs. So we kind of like raised a 700 million new fund starting in 2021, invest in general topics in tech in Asia. So, and also as more we invest in areas like crypto and blockchain. So now we are setting up the side pocket for the crypto blockchain investment. And also the mandate is no longer China, and also it will be very Europe and Asia focused, and global mandate investments. That's why I based myself in Berlin, and also trying to find our European investment partners, set up the new fund, and for this blockchain thesis. So we have covered lots of areas in the past. Bertelsmann entered China. I think there's one question that Sandra prepared for me is like, what did we do when we first entered China? It's actually we focus on the sectors like BPO. At that time, there's a business process organization or enterprise service. We focus on education, and also we focus on vertical medias. So I think in 2008, our investment thesis was to invest in the American dream of Chinese consumers. So typical like automobile, we invest in BitAuto, which is also a vertical media for auto and car purchase. And the founder of BitAuto was actually now the founder of NIO and IO, which is also the EV and also Elon Musk comparison in China. So we invest in this guy, William Li Bing, back in 2008. And also we invest in vertical media for kind of like premium readings like iPhone. It's called Phoenix New Media. It was also subscribed by millions of white collar class and also business people in China at that time. So all of our investment in China was also were all get listed on US stocks exchange and also NASDAQ. So it was quite successful at that time. So that's why the Bertelsmann as headquarters give us more rights to invest in early stage startups starting in 2012. And when we start to invest in Series A and angel of mobile internet startups until now. So that's quite a history of what we did before. And talking about recent topics that we use BI Capital to invest, we actually focus on a more global Chinese topics. Because for the US dollar fund, actually there are selected areas that we can invest. So we can invest in the innovative part that Chinese startups are going abroad. We can invest in a tech part that can serve the global market. We still can invest in the consumer part of Chinese economics. And also we can invest in some consumer robotics business, AI-driven stuff, which is empowered by the Chinese supply chain that we are looking at. And also some AI healthcare is also within our investment scope for this new fund. Yeah, that's pretty much an introduction of who we are and also why I'm here. Yeah.
Thank you so much, Will, for this introduction. And actually, it's quite funny. I was in Shanghai in 2003 and doing an internship at Bertelsmann at the book club in the marketing. So I really know, and it was really amazing to see how committed the Chinese customers were to the book club. And yeah, it was really one of the most successful book clubs that Bertelsmann had in the whole world. So yeah, very impressive to see the development that you made. And also very interesting that you were investing in a company from William Li, who's now the founder of NIO. And you're probably aware of that NIO is also now having a quite big tech center in Berlin. So we're really happy to have them here as well. And William came to Berlin last September for the launch of NIO. Yeah. So yeah, thank you so much, and it's really interesting also to learn what BAY is investing in the mostly nowadays. But could you also give us like an short guess on what you think is a general outlook of Chinese VC? Iman mentioned some areas like Web 3.0 and ChatGPT. Do you also have some ideas on how the Chinese VC will focus on in the next years?
Yes, I think in the past 20 years, as Iman summarized, Chinese VC, Chinese US dollar VC followed a very good practice of what Silicon Valley is doing. So we have a business that is invested and also succeeded in the end, like Alibaba, like PDD, and now ByteDance. It's more like the model innovation of internet business in the past 20 years. So, so these kind of like 100 billion business has become the major driver of return for those US dollar funds in the past 20 years. So I think this concludes what we have done as kind of like a production house for internet and mobile internet applications in the past 20 years. And we can see that the innovations like WeChat and WeChat payment, Alipay, and also some social network sites in China. So these are also kind of like we call it Chinese original innovation of mobile payments, QR code based system. So these are the things that we have done in the past 20 years. But there are also a line of what, Iman summarizes, like we have also the RMB side of the Chinese economy and also investment, and they focus more on the industrial part, tech part, and also in the past semiconductors and also local healthcare. So these also are big lines of investment in China, even when China does not have a really technology-driven capital market. They're kind of, these RMB funds are still the driver of local investments. So there were two lines of investments in China, and now I think it's getting both merged and also detached. So for the merged part is like most VC professionals has to choose whether or not to focus on the deep tech investment that is highly encouraged by the Chinese government, and also the investment model of these deep tech investment by RMB denomination is no longer Silicon Valley style. It's actually a more like, I think the venture capitals are more like kind of a leverage expansion expander for these government industrial plans, and also they're kind of like the satellite funds surrounding the government spending and budget, so as to help the government to invest in industry that is written in their kind of like 5-year, 10 years plans, and also get those companies to list it to attract more direct investment from the capital markets in the end. So this is actually the model of the deep tech investment right now in China, and it's all I think 50% of these investment thesis is also driven by the decoupling with US, and especially in the areas of semiconductor. So it's very interesting. Right now in the global landscape, there were 3 companies that are actually founded and managed by kind of that Chinese are actually kind of like the key tech company that China want to acquire and want to have the capability. So the 3 companies are actually TSMC, NVIDIA, and also the company like AMD. So these are companies either managed and funded by Chinese, but live in different countries, but they have the kind of the tech that the local Chinese want to really acquire, and now is suffering from the decoupling. So this is very interesting things that we're looking at. So for us, one interesting choice is whether or not we're gonna pivot ourselves into our RMB business model, fundraise from the local governments and high net worths in China, institutional investors in China, and invest in local markets, especially in the deep tech sectors. So if you're, but for those RMB investors, they're not only local minded. Actually, they do want to invest in overseas and foreign markets, because some of the technology have to be acquired by global collaboration. We're not looking only at like the original base in China development of those innovations that can really help us to get on a global level. So this is actually one thing we need to be reminded. And also for the US dollar front, nowadays we have to choose from, for example, the US dollar denominated high-tech asset in China will no longer have access to the US capital market because of the geopolitical things. So for the US dollar fund, we have to choose those non-sensitive areas, but still having strong kind of fundamental drivers from the China economy. For example, we recently invested in kind of like an online education platform for aged population in China. It's still a US dollar deal, and also it's highly relevant to the Chinese aging population demography, demographics. And also for example, in AI and healthcare, it's still kind of like largely sponsored by US dollar funds in China. And also for Chinese global business going abroad, like Shein, those cross-border e-commerce company, and also they're still invested, and also the announced recent rounds also sponsored by big China and also Singaporean funds recently, and also US dollar fund. So but these are the sectors that we are actually looking at from a US dollar perspective. And also for the capital market, is I think apart from China local market and also US dollar market, I think right now we're looking at Hong Kong a lot, because Hong Kong used to be a bridge for China to the international capital market before China opening up the economy. So I think Hong Kong nowadays also presents a more and more important capital market role after all the turmoils, all the things happening in Hong Kong. The Chinese government really want to boost the economy there, and also kind of like put Hong Kong as a gateway to the capital. So we will see like Hong Kong Stock Exchange recently has a lot of new policies announced for business that has no profitable kind of like P&L. And also we have seen Hong Kong as the most aggressive government right now in the crypto industry, although there are a lot of kind of like FUD after the FTX events, and regulators tend to be more cautious in this sector. So I think this is actually some good news from Hong Kong. And also I think in the recent 2 days of the National Congress that we have in China, we see like the central government is actually proposing a more market-oriented practice in terms of capital market, and also they're trying to inject capital into that environment as well. A sharp comparison with last year that people have some concerns of the government if they're going to be more market-centric. So so this is actually some overview and perspective from my side in terms of what's happening within the capital markets as a main exit route for us, what's happening with whether or not we have to choose between RMB and US dollar, and also what are the sectors that is relevant to these currency denominations. Yeah.
Thank you so much. That's very interesting, what you just shared with us today. Also, what you just shared from the last 2 days from the Chinese government, the most current updates. So, yeah, could you maybe just really shortly explain what in your view on your eyes would be the ideal candidate of like an international, maybe like a Berlin or German startup that would be suitable for Chinese VC, and what would be the advantages and also maybe the downsides for the startups?
Yeah, and also first of all, Colin, when you talk about a Chinese VC, actually, there's some layer of definition for that. So we have seen some Chinese managed VC, but it is a pure global fund. For example, like GGV. They're funded by two Singaporean GPs, Jixun and Jenny, from Singapore, but they have huge investment in China. They have office in Shanghai and Beijing. And also, I think 30 to 50% of the capital they raise are deployed in the Asian market. And also they have the Silicon Valley office. So these GGV is a kind of like an example of a global fund, both have practice in US, China, and also Southeast Asia because of the founders' backgrounds. This is one kind. Another kind is us. For example, we are kind of like a European background representing Europe and also has a big source of money from Europe invest in Asia. But now we are also looking at global markets, setting up office back into Europe. And so this is kind of like another big kind of like category. I think similar funds are like maybe Cathay Fund. They have office in France, and also they have big exposure in China. And also we're looking at used to be like Ventec, the Paris French-based fund, and also have huge deployment in China as well. So, but also they have investment in Europe. So these are the kind of like cross-border global funds that are managed by either Chinese, also French or German, and they have a global practice that can be easily accessible. And for the companies in Germany, that could be one example we have is ClearMotion. So it is actually a proactive type here. It's a proactive suspension system for high-end EVs, and they're partnering with NIO especially. And NIO Capital was the investor in this company. We were also investor in this company earlier round. It's actually like a restructure round actually, because the company put a lot of R&D before and it was high valuation, but now they have some real clients from NIO, and also we restructured the company and put it into capital markets again. So this is a company funded by a German founder, they are founded by US founder based in MIT, a related area, but managed by German CEO. So, and also because they're kind of like the background of Continental, and also they have a lot of relevance to the German auto industry. So this is a good example. It's like a global team, US, Germany, and also China clientele, Chinese-based investors invest in this kind of business. So the reason why we invest is because it's highly relevant to the growth of Chinese EV industry. And also it's also leveraging the kind of like the expertise, especially in auto industry in Germany and also in US. So this is a perfect example of when we are doing investment, we are not looking at kind of like a regional perspective or ethnical perspective. We're actually looking at how we can leverage the resource and capability of different countries because of their industry advantage. I think ClearMotion is actually a perfect example for that. And also for NIO is, I think NIO Capital is actively looking at kind of like suppliers, components, tech innovators in Germany, in pan-Europe, I think, not only in Germany and also in US, for their kind of mother company, NIO, to expand supply chain and get advantage to those suppliers. So I think this is also kind of the thing relevant to the Chinese industry. So if you're looking at whether or not China investor will be interested in you guys, you have to look at the national plan of the Chinese government, because all the investment thesis is written there. So no VC can invest outside of kind of like that kind of plan, because we need, as early stage investor, we can only support the company through the Series A and Series B, but for the Series C and more IPO stage, we need some global kind of like a macro thesis on also huge mega funds to support. And in local Chinese market, the mega funds means that the social security fund or the fund set up by the banks, but they are following the national plans. And I see from the kind of like questions from the talk box is like LinkedIn is no longer kind of like LinkedIn is not accessible, but kind of like half accessible in China, but because the talk function and also the post function was banned in China. So how can we get access to the Chinese? I think first of all is Kerr Europe. I think 360 Kerr is actually kind of the largest media, and also they have a network of financial advisories business. I think back in China, and also we do have a lot of demo days. So there's kind of like Demo China in China, and also I think most of the, because one interesting thing is in China, we do not do a lot of business on email. We are not really used to email, and also we schedule meeting via WeChat. So if you're talking to Chinese investors, WeChat is the easiest way. So for example, I think Imo Wang can forward the WeChat account of those VC contacts to you guys easily. Just if you have a WeChat, they can forward to you and you can get access to them. And also you can hire some local Chinese financial advisories, maybe like China Renaissance, like Taihe Capital, like Lighthouse Capital. They can help kind of like, they already set up office in Singapore for the global expansion. They can help those entrepreneurs to target as those top VC funds in China as well. And also for, I think for the
maybe the other questions we will have in a second. I would like Iman to come in now, you just mentioned ClearMotion, which is really the perfect example. But I would also like to know Iman's view on this. Do you have some additions on what's like the perfect candidate in your view for like a German startup that could get investments from VC with Chinese involvement? And do you see what are the advantages, what are the disadvantages in your view for the companies?
Yeah, sure. I mean, first of all, totally with view. So I think it's really important to distinguish what you really want. If you just want investor, if you just want money, you do not need to talk to Chinese VCs. You need to have some relation. You need to have some synergy, some kind of a China fit, so that you are talking to Chinese investors. If you just want VC money, there's so many firms out there. Talk to your local venture capital investors, right? So back to the topic on the tracks, I think very similar. I think as addition to Will has already explained, we have, for example, we have recognized like last year, there's increasing number of strategic Chinese investors coming out into investing, for example, European startups. Take like Tencent as example. So we knew Tencent is buying a lot of gaming companies doing this and that. But actually last year, like Tencent invested in two German startup companies, both in deep tech. One is the Lilium Aviation, I think in Munich, doing these flying taxis. And another is in Berlin, the Luminova, doing SaaS software services. So these are very classic examples. So Tencent is not just investing as kind of a financial investors for the monetary return, but they are looking at the benefit of these projects who can bring much more value to on a strategic level. So this is very important. So you need to have some stories, some rationales to convince Chinese investors. If you just want investment, just want the money, then talk to financial investors. So that would be kind of our feeling at the moment, because 20 years ago, there's a lot of like purely financial VCs from China. But I think over the past years, this super return from like, you can do like 100 times multiple on one exit, this era is already gone. So all the investors are coming to a more rational level and looking at a more specific technology tracks deep into the value chain of the industries. So this is very important that you do your homework before you talk to any of the Chinese VC investors.
Thank you. Thank you very much. And Will also talked a bit about how to reach out to investors from China. He mentioned your website 36KR, Iman, and he talked about WeChat. I would like to go a bit more deeper into this topic. Do you have any other tips? This question goes to both of you. First, maybe to Iman and to Will. Do you have any other tips? What's the difference when you talk to Chinese business partners, especially in this VC field? Do they need different prepared pitch decks or any other ideas that you have, or any other suggestions would be great? Maybe first, Iman.
Okay, I think first most important, as we mentioned, the WeChat, and then download the WeChat, install it. So that's the first step. And then I think you need to understand that the Chinese venture capital, they get like, I don't know, thousands of BPs, like on a daily basis. There's a lot of Chinese startups, a lot of Chinese founders. So I think most efficient way is maybe to try some accelerator programs, early stage startup competitions, or join some international boot camps. There's a different early stage program providers in the market. Some are created by big VC funds. They created the early stage like a seed program or accelerator program, so that to prepare foreign founders to better, to polish your pitch deck, to prepare your investment thesis, prepare your story for Chinese investors. So you find a lot of these players in China, like, just thinking out of my mind, like China Accelerator, like we also in Germany have the German Accelerator. So all these are some preparation works you can seek. So this makes your journey talking to the Chinese investors more efficient, because if you know nobody in the market, it's really hard to, if you send them email with your pitch deck, most likely you won't get anything back, right? So you need to have someone to make the introduction, to link you between the investment team of these big VCs and your your founders or specific heads, who's really like committed to this China topic. You need to have someone who's really like at a high level. You cannot just send, okay, my working student, someone like that to talk to the Chinese VCs. This won't work. So you need to really get involved on the founders level, I would say.
Yeah, and also there are two things. One is the conferences, because right now Chinese VCs are also actively going abroad to join those conferences. For example, for the game developers, I think in this month we have GDC in US, San Francisco. As far as I heard, the partner of Hill House is going there, partner of Sequoia China is going there. A lot of kind of like investment associates are also there. We have 3 portfolios that is there. So if you see, for example, with 3 portfolios at GDC is like, for example, one is Yahaha, one is for example, Party Animals, and also another is Vicher. So when you found them, from their booth, and you can talk to them and let them get you introduced to the Chinese VCs, because Yahaha is invested by 5Y Capital, Gen Fund, and also Temasek. Party Animals invested by GGV, by Tencent. Vicher is invested by Blue Run, and also they are all invested by us. So, and when you talk to the people there, you can also check on Crunchbase and also Qimingpian on whether or not those companies are already invested by the Chinese VCs, and let them help you to get connected to their investors. Most of the time, I think they will, because if you're kind of like industry peers, people in the same industry, impress each other, they will help you to get access to that as well. And also for the crypto ones, it's very, very conference driven. So if you're going to East Denver, if you're going to Paris Blockchain Week, I think we'll have a ZK Summit in Lisbon, and also a Token 2049 in London and Singapore. So many conferences there. Whenever you go there, you will meet like a bunch of investors there. I think for the industrial part, like mobile phone industry, it's like MWC, right, in Barcelona. And also there's so many Chinese phone makers there. Usually they also have the investment arm within. For example, Oppo has invested in one of our portfolios. So Oppo has an investment arm. And also Huawei, although you guys may not have money from them, but they still have their own investment arm for deep tech investments. And also for Xiaomi, we have seen from the page, Shunwei Capital is actually very global, and also they have a huge team and relevance to Xiaomi investment arm as well. So I think these are the options that you can have. And for very early stage, one suggestion is that I would not suggest you guys to receive first check from the Chinese VC, because usually the first check is invested by either your friends and families, and also some high net worth or the VC, early stage VC that in your region that really knows you guys, can make the decision easily. Because for the Chinese VC, also for the US VC, it doesn't make any sense for them to invest in the first round of very early stage stuff that is far from their regions and maybe have no relevance to the kind of sectors they're currently looking at. So usually first round investor will guide you guys to the next round investors. So early stage kind of like angel investors in China mostly are like kind of like Zhen Fund, K2 VC, and also you can see from the deck from Ker Europe, there are a lot of early stage angel investors that you should talk to. They usually have interns and also scout screening the email. They do respond to the emails. I think they guarantee to respond to the emails. And also these kind of like partners of those early stage funds are quite actively sourcing first round investment. And when you have them, it's kind of like a gateway for all the VCs in China in the later rounds. Yeah.
These are so many great tips, and yeah, it's amazing that now we can travel again and we can also meet with Chinese business partners here in Europe. And thanks so much, Will, for the all these great events that you mentioned. And also Iman mentioned had made some great tips. Iman, you mentioned the German Accelerator, and I also see that we have two people from the German Accelerator in the audience, Sil and Xiaowei La. And both of you, I'm happy if you can join in the chat, maybe some information or some links to the next program of the German Accelerator when there is something available where German startups can apply to, because I really also think that it's a great program to get a good preparation for the Chinese market. And now we talked a bit also about like Chinese business partners coming to Europe. When startups from Germany or Berlin want to go to China, of course, China is so big. There are so many different big business regions. Can you maybe tell us a bit or explain, especially to the people here in the audience that don't know China so well so far, about the differences of the different regions, Shanghai, Beijing, Shenzhen. We talked about Hong Kong as well a bit, Will, already, but maybe, Will, could you please just in short explain a bit more about the specifics of the different regions in terms of startup and VC ecosystem?
Yeah, we can categorize into 5 regions in general for China. The most top north part of China is called Beijing centric. It's actually used to be kind of like the birthplace for all the Chinese early stage semiconductor business and also artificial intelligence, because they have I think they have more than 2 very good universities in China, like Tsinghua University and Peking University, that kind of like the innovation drivers in most sectors. So ByteDance was there. And also big companies, almost all big internet companies in China, except Tencent and Alibaba, was used to be based in Beijing, because they have a Zhongguancun sector that used to be a kind of like consumer electronics hub of China. So for Beijing, it's actually more AI, artificial intelligence driven. And the next part of the China is Shanghai. Shanghai is quite special because it's kind of like a full-rounded city. It was a financial city of China, automobile manufacturing center of China, and also the biggest harbor in China. So, but Shanghai has some specialties, especially in entertainment. For example, we have gaming companies like miHoYo, which is now the kind of like 3rd and 2nd largest independent game company in China. And also we have Bilibili, like the online media, especially for entertainment and subcategories. So Shanghai is very famous for all kind of entertainment related media business, content productions, cartoons. These are kind of like Shanghai specific, but also for automobile industry, like NIO was based in Shanghai, original founding in Shanghai. So Shanghai is also very automobile related hub, and also Tesla factory is in Shanghai as well. So this is part of the kind of like the categorized for Shanghai. And for Shenzhen it's really interesting space. We have DJI, we have Huawei, so you can see that, and also a lot of smartphone makers. And also for the batteries, like CATL is also based in Shenzhen. BYD was like the taxi provider in Shenzhen as well. So Shenzhen is now kind of like the consumer electronics and also robotics center of China. And for consumer, if you're looking at consumer market, we can look at the central and west part of China, Chengdu and Changsha. These are the regions that nowadays there have a lot of new consumer chains and also consumer innovation business, because the kind of like the real estate price there is relatively lower, and people tend to spend more on their daily consumptions and entertainment and also retail. So these are the part that we see a lot of new consumer brands arising. And for the least part is the most southern part is Hong Kong, Macau, and also a little bit of Southeast Asia, Singapore. These regions are kind of like the overseas financial region for China. You can talk to a lot of banks in there, because with your later stage, most of the investment bankers are still in Hong Kong. And also if you're talking about crypto, blockchain, Hong Kong and Singapore is must-go place. Token 2049 in the autumn will be in, I think, in Singapore. And also recently, next month, we'll have a huge Web3 summit in Hong Kong, organized by Hashkey and also sponsored by Hong Kong government. So this is also a region for kind of like a more free harbor of open finance stuff that you can talk to. So these are kind of like a quick summary of the Chinese regions. In terms of VC offices, Beijing and Shanghai are the most for the US dollar fund. And also for the Chinese RMB fund and tech-related fund, Shenzhen is their kind of usually the base office for them. And we don't see a lot of VC office in the central and west part of China. So when you're going traveling to China for fundraising, Shanghai is the first stop, and you can also travel to Beijing. These are two cities that you must go, and also quite centered. So in Beijing, usually it's in the Guomao area, and also in the Liangmaqiao area, which are the two most crowded place in Beijing. If you're tech related, you're in the kind of like east-west part, kind of like west-north part of the kind of Beijing, which is Zhongguancun area. You can see some of incubators like Innovation Works, and also some incubators from Zhongguancun Technology Park. And also in Shanghai, it's also very kind of concentrated. It's either in the Lujiazui Financial Center, and also in some concession areas that usually have a very beautiful villa and nice place that usually these VCs are based. So these are the kind of like the place that you can go to for fundraising in China.
Thank you so much, Will. And if you go to Beijing, then please stop by at our Berlin office in Beijing. It's also in Chaoyang, and I will post the link to the website in a minute. I think Ira, the head of the office, she's also here in the room, and the office helps companies from Berlin that want to enter the Chinese market, and also Chinese companies that want to enter the Berlin market. Yeah, I had to look at the questions in the chat, and please always feel free to ask more questions. And there was a question: what trends do you see in terms of Chinese VC expanding their activities to Europe? I think we talked a bit about this, but maybe Iman and then Will, can you please maybe add some more point if you have any more ideas on the trends or like activities that Chinese VC have in activities to Europe? Could you please start, Iman, please?
I think if I speak of Chinese VC with German origin, I think BAI Capital, no? So Will is the person you need to talk to, no, here in Germany.
Okay.
And I think we also mentioned Casey, no, in France. And so if you are coming from France, so Casey is basically founded by a Chinese entrepreneur, but they have a huge team in Paris, and it's like super international, and they are also having specific industrial focuses. So Casey is also one European players that you should talk to. I think they also raised some new fund last year, pretty big. So yeah, but as in general, you have more US backed, so Chinese VCs, due to the history of the whole Chinese VC industry. But that's a little of the problem. So after 2 years of COVID, so everyone think in the whole world are used to getting online meetings and everything. So people are also using Zoom a lot in China. So that's geographic location is not really a big topic. It's more about the synergies from with your industry, with where you are coming from. So I think that plays a more important role here. Yeah.
And also
for the
fundraising part, most of the Chinese VC are going to Middle East this year. So I think Dubai will be a kind of like a hub, either for European funds and also Chinese funds. So I think this year we see huge increase of investments, and also especially in fund investments from those Middle East countries, because their national strategy is a little bit like looking east in the next 5 to 10 years. And also I think in the past, honestly speaking, Chinese VC look a lot to US, because there are kind of like a topic like copy to China. We copy all the models from US to the China. And also we see like there is also a copy to Europe thesis, like in Europe, like we have a lot of startups in Europe, like kind of like a benchmark in US as well. So So I think we did not look a lot into Europe in the past because it's not kind of like a very how can I say a kind of like a union market for Chinese startups and also for investors. Usually there were still some language problems. So, but nowadays, because of the national strategies of One Belt One Road, so I think Chinese VC will understand like the kind of like a market of Europe and plus Asia is also still larger than the market of US. So for them, it's like a shift. There's a shift of strategy of China to US to Europe as well. So you can, if you go to China, you can see that a lot of people understand the relationship, how important the relationship between China and Europe should be. And also a lot of people have very good kind of impression on kind of like European countries. And also, I think in the past, the European politicians are less aggressive than the US towards China. So I think that people leave a very good impression on those. And also especially for traveling, and also for a lot of overseas students. We spend a lot of time. I study in UK, so we had a lot of alumni in UK, connections in UK. UK kind of like a hub for Chinese students, Oxford and Cambridge. So these are kind of like the legacy and the relationship that we have in the past. I think nowadays we are seeing. When I based myself in Berlin, I think I saw a lot of kind of like my peers traveling to Europe this year, and also they're trying to look a little bit in the market. But and also it's important for us to have for the European perspective to have some reports of how tech industry in Europe is, and if all the policies are open to cross-border investments, I think you will see a lot of money from China, because there's a lot of things that Chinese don't have. So we don't have how can I say ASML, right? It's ASML. So as long as you guys are open, so Chinese VCs will invest. But still, it's like I think there's a huge opportunity between Europe and China in the future if everybody is open for collaboration. Especially from China perspective, we need. So yeah, we need more report. We need more bridge like what we have today.
Thank you, Will. This is sounds really like a perfect, nearly closing words. I also agree. We need more cooperation. We also need it also from the European side, I would say. But we still have more questions. I just see that here's one question that just come in right now. What is the status of the decoupling of US and China economies as of 2023, and what sectors, because of this, open up to providers from other economies? So, okay, so what's the current state? Yeah.
I can answer this question.
Yeah, okay, great.
I think what is happening right now is not all about US and China. It's very interesting because the media like that kind of collision, and also kind of ideology things that kind of picturing someone as an evil and someone as good, and make it like a very confrontational stuff to attract attentions on the media. But actually what we see from the market is the whole global tech industry is getting more local and geopolitical. It's not only in US and China, I think in Japan, in Korea, and US and Europe, because nowadays Europe are also complaining about the subsidy that the US government is giving to the auto industries. And also there are a lot of factories in Germany may be affected by the war, and also the currency change that going to move the factory into US. And also this also caused a lot of political issues. So it's a pathetic thing that nowadays we seen two trends. First is oversupply. So China is investing a lot in the tech stuff. They used to acquire from US, but now they can't. So it's kind of like double investment into things that we already have. And also we will see that happening in Europe as well in the future, because maybe there are some things that US possess but not sharing with the world, or like you cannot get access to easily, and also all kind of subsidy that is putting the cost of all the productions here. So we will see a very big geopolitical thing of tech, because all tech verticals nowadays, in the end, it will develop into a kind of AI-driven model. So you talk about healthcare, now it is very AI-driven. You talk about e-commerce, it's data-driven. You talk about media, TikTok issues in US, media is AI and recommendation-driven. You talk about all the industries, In the end, it will be very smart, intelligent, ChatGPT powered interface. All these businesses are data sensitive. So when we talk about data, we have GDPR in Europe as well, right? So this will become kind of like a very sensitive and geopolitical topics in the end. So all tech sector will be local, a little bit local in the future. So, but the thing is, from classic economic theories, collaboration between different countries and different industries is producing values, and being local is not producing values. So we see if China and Europe can still stay open for that kind of collaborations, the value produced between these two continents will be much higher than the other countries if they do not collaborate with global community. So this is something that we see as a potential. But for me, it's like crypto industry and blockchain industry, as far as I understand, is now the only global collaboration tech industry in the world. For example, Chinese passport holders as developer can still plug in this blockchain community, even when Chinese government are banning all the mining and exchange business in China. But as a developer, you're still okay. But nowadays, if you're a Chinese passport holder, you cannot work for OpenAI because it's too sensitive. And even OpenAI colleagues are actually banned to talk to Chinese investors because of the sensitivity of the business. So I think blockchain industry is the only one that remain as a global collaboration because of the permissionless and interruptibility nature of that kind of networks. So so that's the thing that we have seen as a potential as well. Yeah.
Thank you so much. Iman, you're nodding. Do you have any more thoughts on this question, or did Will answer, or also all your points?
Coming from a different perspectives on this question, origin I think was about the decoupling. So we also talk about this decoupling of China and Germany, here in Germany a lot. But what the decoupling brings, as Will explained, it will bring inefficiency. So it's all this complex and all these protections, these trade wars will bring about. And I think most important for technology industry or people work in startups, where there's inefficiency means there's opportunity, right? So there's some room for you to create a solution to eliminate this inefficiency. So I think this is a double-edged sword in some terms. Take one example, as mentioned, this AI, this AIGC wave now in China. One of the very interesting problems China is facing, there's not enough GPUs, high performance GPUs in China, because NVIDIA cannot sell the 800 and H100. I think H100 is almost not available in China. So which means the training cost of the Chinese AI companies or these big techs are much higher than the training cost in the United States. And this is some kind of inefficiency artificially created by these geopolitical tensions. So yeah, but as mentioned, where there is a problem, there's an inefficiency, there's something artificially made barriers, is always a way for technology founders to find a solution to circumvent it. And I think a lot of VC players are also continuously seeking who can provide a innovative solution to solve these problems that we have right now. So yeah, it's a problem definitely, but also bring some new opportunities, I would say.
Okay, thank you very much, Iman. And I'm just having a look at the chat. Did I miss any questions? Maybe Chris, can you maybe just pop in and ask? I mean, I just see that someone asked if the startups that are fundraising share their non-confidential pitch deck. Of course, if you want to, if anyone wants to share, feel free. But I don't see any other question that's relevant for all of us, I think. Yeah, so knows the access to the Chinese. Okay, so I would say we answered all the questions, and if you don't have any other points that you want to add, Iman or Will, I would close the discussion here. And I'm really, really happy that you shared your knowledge with us. It was super, super interesting, and I'm also very happy that the audience asked so many questions, that it was so interactive. So I think it was a really great session. And yeah, let's see if you can connect later with some of the people and like keep the discussion going on, and thanks a lot. I just wanted to tell you that the next session will be on the 22nd of March, the next how-to session, and the topic will be how to start an impact-driven venture. And we'll have high-ranked experts from the Vienna Business Agency with us, and 3 successful founders of impact-driven businesses. And you will see the registration link in this chat in a second. And everybody also that wants to give your feedback, and we will also post the feedback form in the chat as well. So yeah, thanks a lot. Will and Iman, was really, really great talking to you. And especially Will, you're now in the US, so you made it it was 6 o'clock when we started in the morning, right? So very impressive.
I'm in Denver. We had a huge conference there. Yeah.
So thanks a lot to everybody, and hope to see you again soon at the next how-to session. Bye.
Bye.
Thank you. Bye-bye.
Bye.